Aloha, YouTube. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is August 17th, 2020. Yeah, and it is Monday. Thank you for checking out my channel. I appreciate everybody who has subscribed already. If you haven't, please hit the subscribe button down there. It doesn't cost you anything, and it helps support the channel. How was everybody's weekend? I hope you had a great weekend. You were safe and healthy out there. I kind of did some beach time with some friends who flew in from Guam a couple weeks ago, but because here in Hawaii there's a 14-day quarantine, they just got out of quarantine yesterday, so yesterday I kind of took them around and took them to a couple of my favorite spots on the island, to some of the beaches and stuff. So my Instagram is DYInvest for David Yansen Invest. You can check out some of the pictures there with my Instagram if you want to see some of the beaches and trails that we went on yesterday. So, and we'll probably do some more stuff this week, and till the end of the month basically is when they're going to be here till. So you can check out that Instagram if you want to see what places we tour and check out on the island of Oahu where I live. So anyway, we were looking at my dividend tracker here. And today the S&P 500 was up. It is moving towards record territory since February. The Dow was down, and it has been up and down over the last month, and I think the last 2 or 3 days it's been down. The Nasdaq has been more consistently up than both the S&P 500 and the Dow. So the stock market not doing too bad. There is some recovery here and there as certain companies have come out with their earnings reports and they have beaten expectations and they've beaten in revenue. And then there have been others that haven't done so well. So two major retailers, Home Depot and Walmart, are doing their earnings report this week. Everybody's expecting them to do just fine, to beat expectations. Everybody's expecting them to beat on revenue, as Walmart was very much part of the stay-at-home economy. You can pull up to Walmart and you can have them put the groceries into the car for you, or you can order online like I do through the app. And I just show up and then you check in and then they bring you, whatever it was that you ordered. And here in Hawaii, we don't have a huge grocery section because we don't have super Walmarts like on the mainland. Like I lived on the East Coast in Tennessee and Michigan and Florida. They have these super Walmarts where the grocery side is as big as a regular grocery store like Safeway or Publix over on the East Coast. So here in Hawaii, not the case. They've kind of been regulated. So the grocery side isn't that big, but still, if you want to, pick up your regular shampoo, soaps, toothpaste, stuff like that, you can still order through the app and pick it up at the store. They drop it off into your car. So expecting Walmart to do quite well with their revenue. It could still be down a little bit. I really don't think that is possible, but you never know. It's their first quarter with a full during this full stay-at-home economy, so anything's possible, but I'm sure they're going to do just fine. Home Depot, some people that were working more from home, a lot of time was saved, not having to commute or not having to get up an hour or 2 hours early to get ready for work, and not having to commute on the way back home from work, sitting in traffic for an hour and a half. So more improvements on the house. So Home Depot, Lowe's have all been said to have been doing well in the stay-at-home economy because more people had more time on their hands, not having to commute back and forth to work. So I'm expecting them to do quite well. I think most people are expecting them to do quite well. Looking at my portfolio here, last week I did a video showing you my dividend tracker here on trackyourdividends.com. I was hoping that this total number would get to 13,000. It might have a better chance of getting there this week. It really would have had a better chance if I had added Walmart and Home Depot like I was kind of planning on doing 2 months ago, but instead I thought that I should take the time to build out my portfolio, and I have a portfolio with 2 accounts with M1 Finance. I have videos on that if you want to check those out. I also have Robinhood, which is more my growth side. So the majority of my holdings inside Robinhood don't pay dividends. So I have Amazon, Facebook. I even have a couple other Sorrento Therapeutics, which was kind of had a mixed day today on some news about their saliva test, that test kit that they were working on, hoping that the FDA here in the US would approve it for them to be able to do this 30-minute test to find out if people are positive or negative. So that is, Robinhood is mainly my growth side. And I decided to put Robinhood in my growth side. Well, I kind of won't get into it. I have some other videos you can check into it. I try to keep my videos around the 10-minute mark. Sometimes it still bleeds over. That's why I'm just doing this one video today, so that I can kind of keep it under that. With Track Your Dividends, I find it easier to stay in the 10-minute mark and under versus my M1 Finance and my Robinhood, where I show you all of my holdings and give you kind of an explanation of their earnings and what they did, for the week or the day, and how they've been performing for the year. So going back here to Track Your Dividends, you can see my total value, or my portfolio value, almost $1,000, mainly on the news of Tesla. Tesla, over the last 4 days has gone up 30%. And then somebody was saying that, I forget the firm that came out and said that there would be an 1800. They were now saying that Tesla would start trading at 1800. Well, what happened today? They ended the day trading at 1800. So that put this value significant, bumped it up. If you checked the video last week, I think I was like in the 700s here. But I was still in the 12,000s. So, and I was hoping last week I would have gotten to 13,000, but it didn't quite work out. So maybe it'll happen this week, as the S&P 500 is close to getting to that record again. But you never know. You never really know what the stock market's going to do, what news might come out. Even though the majority of my holdings in my M1 Finance pay dividends, and they are strong Fortune 500 companies, you just never really know. So news could come out like what happened with Wells Fargo, or like what happened with Luckin Coffee in China, or GE here in the US. Just all kinds of different things, can all of a sudden come out, and then the stock completely plummet, and the company either has to restructure, or they go into bankruptcy, like what might happen with some of the airlines here in the US. They're borderline bankruptcy right now. American Airlines and JetBlue are looking to do a deal, but you never know. So that's why I do the majority of my company's S&P 500 dividend paying. At 44 years old, I feel that I need strong companies, and I would like to get paid those dividends. So every single year, as of right now, by the end of 2020, I will be paid $305, and this will increase every single year. So in this website, this is a feature that I really like in this website. If I go to Future Free Tools here, because I'm on the free side of it, and I go to the Future Value, and don't forget to subscribe to the channel if you haven't already. Also, feel free to share with your family and friends as well. They might like some of the content that I put out, showing my holdings in all of my accounts. So you see here my 5-year dividend growth rate, over 9%, just barely. And then it tells you here starting annual income of 2020, $304.65, and then ending 2029 with me not adding anything, not contributing to any of my holdings, or buying any new companies or anything like that, $676 by 2029. And if we click to 25 years out, then it tells you the same thing, starting 2020, 2044, over $2,500. So personally, I plan on contributing. That's my plan, is to continue to either invest in new companies or continue to build out my portfolio with the existing companies that I have, because I feel that most of them are very strong and are future-proof and hopefully recession-proof. So far, my Roth IRA has been way more exceeding my expectations in this recession that we started to go through here, when the big dip happened in March. And my individual side has been holding up strong as well too. I believe I have over 12% return on the individual side, and even my growth side is in Robinhood is holding up well. And I don't put a lot into my Robinhood account, but it's still in the green. It's still doing relatively well too. So hopefully this will get to like $40,000 a year, where every single year in annual dividends, I'll be paid like $40,000 a year, and then I'll have significant capital gains. And this will just be the dividends. This won't be the capital gains. It'll just be the dividends. And then maybe I have another little part-time job where I make another, $40,000, $50,000 a year, when I turn 65 or whatever. So, and that's if, wages go up. The federal minimum wage hasn't gone up in 20 something years or whatever. I think I was in college 1996 or whatever, the last time President Clinton raised the minimum wage to $7.25. States and different cities have raised their minimum wage, but the federal minimum wage hasn't really moved. So hopefully it moves significantly by the time that I get to 65, so that I can make $40,000 or $50,000 a year, working part-time, on minimum wage, or maybe there's another new tech thing that comes out where I just sit at home and stare at the television, and that's how you get paid. You never know. So anyway, thank you for checking out the channel. I've run over the 10-minute mark. I do appreciate you following my channel, supporting the channel. Hit the subscribe button, share with your family and friends. I hope everybody has a great day. Be safe and healthy out there. Mahalo and aloha.